This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Interested in learning more about investing in startups, launching a new startup and need to raise funding? The Startup Funding Espresso is a daily podcast in a short, concise format delivered to your inbox every day, Monday through Friday. In the time it takes to drink an espresso, you can learn about startup funding. To subscribe, go to investorconnect.org and put your email into the pop-up box. Well, hello, this is Investor Perspectives. I'm the host of Investor Connect, Hall T. Martin, where we connect startups and investors for funding. Today we have joining us Hector Jirau, Chief Investment Officer at Jirau Capital Management. Jirau Capital Management is a scientist-led investment advisory firm at the intersection of breakthrough science, providing exposure to the latest advancements in healthcare and innovation. Hector, thank you for joining us.
Thank you, Hall. I really appreciate you having me here. I'm very excited to share some knowledge with you.
Great. Well, tell us more about your work and what you do.
Definitely. So let me give you a little bit of insight of my firm. So Jirau Capital, like you mentioned, is a scientist-led and evidence-based investment advisory firm based in Puerto Rico, but with subsidiaries in all over the United States. Our firm offers advisory services to both high net worth individuals and institutional clients and investors. We, to my knowledge, are the only healthcare-focused advisory firm in Puerto Rico. Of course, we have been receiving a lot of new advisory firms moving from mainland US to the island, but has been born and raised in the island. This is the first healthcare-focused firm. We do have a focus on biotechnology and niche areas in the field. We offer services ranging from business valuation, wealth management, separate managed account, and access to different pooled investment vehicles, both for public investment and also private markets. All of them focus in the healthcare sector. So if you like, I can give you a little bit more of info on exactly what we do and how we do it.
Yes, please. Tell us a little bit more about what you do and how you do it.
Yes, awesome. So I think one of the most important things to mention is our team. We're comprised of biomedical scientists. All of our team has an education both on the undergrad level and the graduate level up to PhDs, ranging from biochemists all the way to experts in drug design, experimental therapeutics, and even an electrochemist in our team. As of what I do, well, as you mentioned, I'm the founder and the chief investment officer at the firm. To the most recent events I can think of that could actually benefit today's talk, we are currently launching a crossover fund to provide access to both early stage private companies in the healthcare sector and also invest in publicly traded companies. Likewise, I currently serve as the investment fund manager of the first early stage venture capital firm in Puerto Rico. It's pretty much dedicated to both technology, disruptive tech, innovation, but also it's the only one that actually provides access to capital to small biotech firms, those that are way into preclinical stages, all the way up to a Series A round. So being in Puerto Rico, being a small island, I dare say currently we are the ones that are leading investments in healthcare here.
Great. Well, let's talk about the growth in the biotech life sciences segment today. What do you see happening here?
Wow. As you may be aware, during the last few years, given COVID, biotech and healthcare per se has exploded. I mean, it has basically emerged as a beacon of hope for most of the investors and, of course, the population. So last year, per se, you could see there were more than 30 billion invested on more than 1,000 deals. That's basically, if you take 2019 or 2020 data, it's almost 60% a year increase. And that's, of course, after investors recognize the importance of vaccine development and treatments for such dangerous diseases such as the COVID pandemic. Likewise, you could use as examples the 3 vaccines that were produced by Pfizer, Moderna, and Johnson & Johnson, and together with more than 10 drugs that have been actually granted emergency use authorization by the FDA in the last few years. You could say the sector is growing, biotech is exploding, and there's a lot of interest in the sector. Of course, if you focus on public markets right now, biotech is not doing its best, but that's, of course, to be expected after a year full of growth for the sector per se. But hey, the FDA has approved more than 53 new drugs and biological products in 2020 all the way to today. So you could say the growth is quite significant. And we're talking about more than $25-30 billion in funding per se for private companies per se.
That's quite a bit. Well, so what do you see as the primary trend in the segment today?
Great question, Hall. So right now, if I were to give you a little bit of insight on the trends per se, I would start by targeting specifically which niche are being targeted right now. So that would be drug discovery is a very hot topic right now in biotech and also healthcare overall. Gene editing, there's a lot of money cash inflow to precision medicine, on biomanufacturing, and I like to target one in specific, which I'm very excited about, and that is synthetic biology. There's so much hype going right now on synthetic biology, such as, cell-free protein expression systems. 3 years ago, this was not a possibility, but thanks to artificial intelligence, advances in big data, the Internet of Things, now this is a possibility. And as you may be expecting, people are just pouring money all over it. So I'd say all of these trends are very hot right now. You could also add bioprinting, microfluidics, tissue engineering, you name it. But to be brief, venture-backed biotech companies, as you may have seen, they are gaining a lot of traction per se and gaining access to public markets earlier in the company life cycles. Particularly, companies are going public now earlier in the drug development life cycle. I've seen so many preclinical companies doing IPOs right now, which is something you wouldn't see back in the days, like in 2012. A company going public with a preclinical stage product, that was not usual and definitely not easy either. And you're seeing all this flow into this type of early stage companies that actually flag you that there's a lot of interest in the sector and in the industry per se. Now, you could even see startups providing auxiliary functions to pretty much drug discovery platforms, not necessarily even having their own product. They're basically looking to help other companies. And with the new financing structures such as SPACs, which, as you may be aware, are a very hot topic as well. There are so many SPACs sponsored by biotech and life sciences right now. And you could see very prominent biotech investors such as Cardin, Deerfield, Lifeside Capital, 5AM Ventures, Raw, Perceptive. All of those sophisticated investors currently pouring a lot of cash and being able to raise money enough to actually get this company sponsored by SPACs. So I dare say there currently is a lot of love for biotech. I feel it should stick because honestly, we have seen the importance of biotech thanks to the last few years and the pandemic. So it's currently a great time to be in the field. I'm definitely grateful to be able to have this type of exposure to healthcare per se, and looking forward for this trend to continue.
Great. So what makes for a successful company in the biotech space today? What do you find is unique about the winners versus the ones that are also rans?
Wow. Okay. This is a great question. So if I were to pick where to start, I'd say partnership agreements. One of the main things I see of successful biotech companies moving forward is they actually have solid collaboration agreements and solid partnership with industry leaders, particularly in research and development. So I've seen a lot of early stage and venture-backed startups that have been developing, gene sequencing platforms, which sound very interesting, but they do not have, let's say, an industry grandfather. They are not able to actually move forward as fast as they should. And as you may be expecting, biotech companies do burn a lot of cash on a month-by-month basis. So they really depend on having access to platforms, having access to a lot of the R&D instrumentation and R&D consultancy that requires for a robust platform in biotech. And they usually lack that, and that ends up in their demise 4 to 5 years after. Now, if I've seen something that has led successful biotech companies, it's they have from the start a solid partnership with a leader in R&D. I don't know, Amgen, Pfizer, or even Nestle, and that actually helps them push forward. And most of them actually get acquired by these partners. So it's always a good idea to have this type of collaborative agreement. The second thing I'd say, and I like to emphasize this, realistic valuations. Now, there's a lot of intangibles and it's quite difficult to value an early stage biotech company. And that's something we can all agree on. But nonetheless, most of these companies end up, for some reason, not actually sticking to conservative valuations. And after a while, they get devalued. And that's like the worst thing that could happen to a company, being devalued. And in biotech, that's fairly easy because most of the outcomes are binary. So you either make it or not. And if you are just pushing yourself to, just say, oh, my company is worth $100 million because my idea, I believe, will be able to generate 2.5 billion in 3 to 5 years. Well, you better hope you actually do and reach that target, because otherwise your company is going to get devalued and it doesn't get better after that. And that's a very important point I like to make whenever I see a successful company and compare it to an unsuccessful one. Realistic valuations. Another thing I like to see whenever I'm going to make an investment, and usually works for successful companies, is diversification of their assets. Now, I do know there are many companies that like to focus on a single small molecule therapeutic. For some reason, they believe their drug for targeting breast cancer will make it to the next level, and maybe it does, but that is a completely binary outcome, and binary outcomes rarely work. I mean, if you were to take the probability of success, different phase 1 up to phase 3 clinical trials, and the probability that no other company actually beats you to it, you will see that actually making it to the next side, it's very difficult and costs a lot. And investors know this. They rarely take this type of risk unless they are certain they're about to make a great investment. But otherwise, if you only have one asset on your company, your pipeline is based on a single target for a single drug, I don't really think you'll be able to either secure funding, or you are onto a rough patch to actually make it to the other side. That is something that a lot of companies aren't aware of. And this brings up my next point. So one thing is actually diversifying your assets, but having the right partners for the right company, it's very important. I've seen many life sciences companies, early stage biotech companies that have a brilliant team of scientists, but that team of scientists is not leading the research and development. They are actually managing the company. And one thing is doing research in a lab. Another thing is actually managing a business. And this ultimately leads to their demise. And it's fairly common to see that you get a group of 3 scientists that manage to actually develop a small molecule that on animal models works perfectly fine, low toxicity, great efficacy. They believe they can take this to the next level and initiate clinical trials. They actually manage to secure 2 to 3 million somehow. And that's when it gets fun, because they believe that, we get our drug and our pipeline to the next level and it's all done, right? I make a lot of money, but it's not that way. It's a company. You need to manage a company. And for that purposes, you need to get a management team. Someone that's business savvy, that knows how to raise capital, that knows a lot of marketing strategy and knows how to communicate. I mean, whenever I go to an investment conference, that's the first thing I notice about a company. How solid is their management team? Who am I investing in? I mean, they might have the best scientists in the world, a next graduate from Harvard with a lot of recognition from the National Institute of Health or this DOD. It's everything looks beautiful, but if the management team is not solid, maybe I get in, but on the next capital raise, I might get diluted on a scale unimaginable, and I might be actually getting the worst deal of my life, even though I believe the science was actually working fine. So that's another thing I really like to see. And I've seen that successful biotech companies actually achieve. They have a solid team of scientists. They have a solid management team. They have great partnerships with big companies. They diversify their assets. They have different pipelines targeting different tissues, different organ, different diseases, different ways to actually deploy their therapies. And at the end, it makes for a successful company.
That's great. So tell us more about your participation in the life science segment. What are you guys actually doing at Jirau Capital?
Awesome. So we actually, I always like to answer this in a two-part statement. So initially, we mostly focus on public company investments, as most of our investors really like exposure to healthcare per se and in a diversified way. But we have recently been focusing more on private investments with the idea of actually launching a crossover fund, right? We do public investments. We also do private investment. It's a lot easier if we pretty much do both and actually benefit from the diversification points that we get from doing private investments, right? So in the private area, we not only invest in healthcare, but we also participate a lot in technology investments. We have participation in e-commerce. We have participation a lot in AI-derived platforms. Since optimization and maximization algorithms are the hot stuff right now, we try to actually have a very diversified investment portfolio by actually partaking in this type of sectors. Likewise, recently we have been trying to get exposure on more niche areas of biotech, such as orphan diseases. Orphan diseases are usually very difficult to actually fund. Most of the pipelines right now in this type of area are based on gene therapy, which, as you may know or heard of, it's actually very difficult to get right. There's a lot of toxicity issues. There's a lot of severe adverse events going on most pipelines right now. So it's a very niche area, but definitely very rewarding. I mean, you're basically targeting a segmented side of the population, people that actually really need some type of healthcare attention, and they usually don't really get noticed in the fact that these diseases are so rare and you don't really actually get to see most of them. Nonetheless, it's a very rewarding area. It actually, I'd say, touches a little bit of precision medicine on it as well. And we have been trying to get as much exposure as possible to that side per se. Just to mention a few of the things that we have been working on. So given the fact that this type of private investment in private companies that are doing this type of specialized research and specialized development, we have been working tirelessly to actually develop a quantitative model to be able to diversify and allocate capital the proper way while actually sticking to our liquidity requirements and allowing our long-short equity strategy to work at the same time as holding all of these illiquid positions, which leads me, and then I bring it up again, the fact that we are looking to launch a crossover fund for these purposes per se.
So what else should we know about this segment that we haven't covered so far?
What can I say? I'm biased because I'm a scientist by nature. So I'll always say healthcare is one of the most beautiful sectors out there to invest in. It's one of the most rewarding in terms of being invested on. Yes, there is a lot of risk. There is a lot of volatility involved if you're into public markets, and there is a lot of failure risk if you're into private markets. But at the end of the day, one successful outcome changes so many lives. And likewise, you actually get a very decent return on investments. So if I were to encourage both sides of the coin, investors and startups, I'd say, hey, if you're starting right now in biotech, you're, trying to develop your own firm or trying to develop your own small company with it. Even though you have a single pipeline, go for it. Go for it. Access to capital has never been better in the sector, to be honest.
Great. Well, my final question is, what changes do you expect to see in the life science space, say, in the coming 12 months?
Well, I wouldn't actually know exactly what to expect in the next 12 months. I'm always a very optimistic person, but I can say we have been consolidating in this sector for the last few months. So I expect a lot of upside on it. So I wouldn't really find it weird if we actually more cash inflows were occurring, or even more access to capital for private companies, both in mainland US, but also in emerging markets. There's a lot of action in biotech in Korea. There's a lot of action in biotech in South America, likewise. And you usually get a beautiful discount if you invest in those companies, compared, of course, to mainland US. But the sector is booming. There's a lot of opportunity. I'm invested, both private and public. So
That's
all
great.
I see is positive.
Wow. Well, how best for listeners to get back in touch with you?
Hey, you can always reach out to me via my email, hector@jiraucapital.com. You can always reach out to our website, jiraucapital.com. You can find me on LinkedIn, Hector Jirau, that's Jirau. And hey, you can always reach out to Hall, and he makes sure that I'm able to reach out to you.
That's great. Well, I appreciate you joining us today. We'll put that in the show notes and hope to have you back for a follow-up soon.
Most definitely. Always do let me know how can I help. I'll be more than happy to.
Very good. Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.